Hello, friends. In this episode, I would like to talk about money and investments. First of all, I would like to share certain ideas and insights. Stay invested and start early and understand the power of compounding. Don't interrupt the process. Let it take its own time. At that time, avoid overlapping of funds. Keep limited funds. There are people they keep 50 funds or 100 funds. It's very difficult to track. The best thing is to keep less. Less luggage, more comfort. When you have a limited stocks and scripts, you can track and monitor. You can take feedback. Then you'll be able to take better decision. Avoid the analysis of paralysis and stay invested. These are all the simple tricks and trades of investments. And there is a head mentality everywhere. In the past, people rallied about gold, then crypto. Then again, stock market is down. It seems there will be a bubble, and any crash is expected. According to the research, Warren Buffett is sitting on the cash. Probably is trying to buy new stocks. So you should keep some cash with you because cash is king. But unfortunately, most of the people they don't keep cash. They always stay invested. So you must keep a little portion of cash to leverage volatility. So whenever there are dips in the market, you can invest little by little, so that when the market shoots up, then it can you can get returns. So IT is down currently, and artificial intelligence stocks. I think some correction is expected. So be cautious because tough times are ahead, and gradually we are recovering from this Iran and Israel war. So things are getting all right, but then again, from the domestic fund that front, that is India, there are some challenges. Devaluation of rupee. So lots of things are happening. So you should be prepared mentally. But then again, the good news is that India's growth story is intact because we have average population of Indians are around 28 years of age. So they are young and 1.4 billion consumers. So lots of opportunities are there. So we should, if we leverage the demographic dividend, so we can outsmart other countries, especially China. But when we look at China, China is already far ahead of India, and there are two blocks which are dictating. One is US and second is China, and India is trying to play a major role, and we are very strong in many aspects, militarily in many aspects. But again, currently the ranking previously to I think India was the fourth largest economy. Now it slipped to sixth largest economy due to the dollar and devaluation. But overall, India's growth story is very intact, and there is nothing to be panic. Apart from this, I would like to share some ideas about investments. Usually, you can get more money from equity. The second level is you can go for gold, or you can go for real estate. Then finally, you can go for FD. FD won't give you much returns because 6% is the inflation. Mm. So the best thing is to stay invested into mutual funds, and you choose mutual funds which are good with a track record, and diversify in such a way that you can balance your portfolio. Keep your portfolio very simple and straight and hit the bullseye. So this is the messages I would like to share. Apart from this, gold ETF and silver ETF now are being done, and so these are all the things which are happening. sorry Sorry for the interruption. Sorry for coughing. So these are all the ideas and insights. So if you work from 9 to 5, best thing is to go for mutual funds. If you are sitting with cash and if you want to play in a huge way, then you can go demat account, and you can start trading in the stock market. And stock market is a kind of popularity contest. So you have to be very much careful about the stock market. It's a brain game. Stock market is not gambling. Many people think it's gambling, but I believe stock market is a game of probability, decision making, and psychology. So various aspects are involved. So if you play well, and if you keep yourself away from emotions, and if you are very rational, then definitely you can make good money from the stock market. Precisely, uh, focus on be rational, not emotional in the stock market. And there is a quanta investment. Quanta investment means, which is related to probability and mathematics. This is devoid of emotions. So this is a new concept which is catching up. So like the people are coming up with lots of models and frameworks. So whatever you do it, you have to do it in such a way that you can make money and impact. So let me share with you my challenge that I had a brain stroke in the year 2021. I survived because of my positive psychology. So the message is very simple and straight. Start early, stay invested, and understand the power of compounding, and keep little bit of cash so that if there are any dips, you can invest and you can get more money. Thank you for subscribing to my channel with gratitude.